Hi, this is bar by bar review of ES for November 27th, 2024. First bar of the day is a gap down. It's a bull reversal bar, rejecting the gap down. However, very conspicuous tail on the top and bottom of the bar. And it's a doji bar. It's a trading range bar. And on the open, you should expect a trading range to form with some sort of wedge or double bottom, or double top. And you should expect a trading range. So that's what I expect here. Bar 2 is an inside bar with a weak close and a big tail on the bottom of the bar. This body is bigger than that body, so traders sold the close here, expecting a sell-off on the open of the day. We have a gap down. It could be looked at as a leg 1, pullback, leg 2, but it looks like there was buying into the close of this bar. Bar 3 reversed up, and we found sellers above the open of bar 2. However, it's entirely overlapping the other two bars of the day, so that means that this is indeed a tight trading range and a trading range open, and we're consolidating below the moving average. Bar 4 broke out to the upside, and we found sellers above bar 3 and above the EMA. This is the second time we've rejected the EMA today. So in the first 20 minutes of the day, we have 2 failed breakouts of the EMA and 1 failed breakout of this tight trading range. So we may find more sellers up here. In fact, we may find more sellers below bar 4 as well. Bar 5, bear breakout bar, reasonable signal bar for the short, and not quite 1R of the signal bar yet, but we will probably get there based on, in general, the bearish strength of the day so far. But bar 6 is a small bull inside bar. The bulls aren't going down without a fight. However, this fight is probably not strong enough to reverse all of the bearishness so far. Bar 7, traders sold the close of the bar, and now we're breaking out below the small tight trading range with 5 and 6, and we found buyers at the 2 and 1 low. So we may continue to find buyers here, but overall bearish. It could be leg 1, pullback, leg 2. It's overall a triangle open, and we're testing the low of the triangle now. Bar 8 tested the top of the triangle, triggered the stop entry buy signal for the bulls. This is not a good buy signal bar, therefore we found sellers above that bar. Bar 8 is also a failed stop entry for the bulls. Now if you're a bull and you took this stop entry, you're effectively trapped into a losing trade, and you may give up your position below this bar, certainly below this low and that low. So for that reason, this stop entry short is reasonable. We had a brief pullback into bar 8, into the sell zone of bar 8, or at least the midpoint, and we found sellers there. And then we found sellers below bar 8, and we formed a strong bear breakout bar on bar 9. Bar 9 is breaking out below all the bars to the left from the open of the day and breaking out of the triangle and closing below that point. For that reason, bar 9 is a bear breakout bar, and this could be the start of a stronger bear breakout. However, there's a small tail on the bottom of 9, which means we may begin to go sideways if we do not have very good follow-through. Bar 10 is not very good follow-through. Bar 10, not quite enough to reverse the damage here by the bears. After the gap down, this could be a gap down with a 2-legged rally testing the EMA, and now trend resumption. However, trend resumption looks like 3 legs down here. Reasonable for the bulls to look to buy, but after the bulls being trapped here at the high of bar 7, I expect that if we do get to here, and to this point, we would probably find sellers. Bar 11, traders sold to close bar 10, bear inside bar, tail, micro double bottom, but really not enough reason to buy. Probably better to be short or flat. Probably not a sell to close bar, but I do expect more downside. 12, we get more downside, small rally, and then sell off. Climactic bar, racing down and pulling back into the close of the bar, which means that bears are probably scalping out, and that this could be forming an overall trading range. Overall, it looks like a slow drip down. This is forming a tight channel down, and now we're breaking out below this trading range from the low of 58 and closing below that point. In fact, we're testing the low of 36 over here. But we did not close below that point yet. Bar 13 is an inside bar. We have a breakout, pullback, good signal bar for the short, but it's an inside bar. That means that we went sideways, we formed a triangle, and we formed an overall trading range. So, if you take this short, you probably have to get out pretty quick. What are the odds that we reach 1R of this bar? Either way you look at it. If you take the stop entry, is your stop up here, is your stop up here? If we rally, we probably find buyers, if we rally, we probably find sellers above 13 and 12. So really, a stop here is more of a skunk stop. In bar 14, small rally and then sold off below the low of 13, closing below many bars to the left. Now this tight channel is forming a parabolic shape, and it's an overall bear breakout. But what's the problem with the breakout? The problem is it's climactic and we have a lot of bad follow through and a lot of overlap. And because of that, there aren't a lot of trapped traders. So if we start to stall and go sideways, we may start to find buyers. However, this channel down is very tight, and on a higher time frame, it's a breakout. So if we were to look at a 15-minute chart or 30-minute chart, we would see maybe a doji open and then a couple of bear bars. So really no reason to buy. Probably better to look to sell the highs, sell rallies. Bar 14 sold off, pulled back into the close of the bar. I expect more down, but I expect a deeper pullback. 15, much deeper than I expected, but it's a sell vacuum test of resistance, the inside bar. We broke out above the low, and now we're testing the high of the bar, and we reversed down. Traders sold to close at 15. Bears looked at this, and they said, oh wow, that's a strong bar, but problem is it's climactic. It raced to the high of the trading range and then sold off. It could get a second leg up, but it's got such bad follow through that we're probably going to find more sellers below this low than buyers. This is probably short covering. You could look at it as a breakout test of the 10 low, 11 low, and failed, meaning that the breakout tested those lows and failed, reversing down. Bar 17, doji bar, small pullback and then a sell-off, but we scalped out. We could be forming a channel on a smaller time frame. 18, sideways, strong bear bar, inside bar, probably more down, probably sellers above these bars. Traders sold to close of 18. 18 broke out below these lows and reversed up from a test of the higher time frame EMA. This is a 221 bar EMA. Probably more down, but probably more sideways as well. 20, sideways, triggered the stop entry, but this is not a good buy signal bar. Therefore, we may find sellers above this high. This is a near inside bar. It's entirely overlapping the prior bar. We have two pushes down, and the second push is made of two pushes as well. So we could get a couple of legs up to calm the market down and reset the market cycle. But instead, traders sold to close and formed 21, a strong bear bar. But the problem with 21 is we found buyers below the low of 20, and we also have the low close, 19, and we reversed up and closed above that close as well. So this could be bears disappointed enough that they're scalping out and now probably looking to cover more above the highs of these bars. But the channel down, you can't ignore, is too tight. It's starting to broaden, but that just means that it's forming a broader channel on a smaller time frame. And on this time frame, it's still a tight channel. And anytime you have a tight channel on this time frame, it's a breakout on a higher time frame. 22 is a bear inside bar. Considerable tails on the top and bottom of the bar. It's a trading range bar. Probably more down. We may begin to find buyers, but the channel down again, too tight to look to buy down here, at least in my opinion. We triggered a stop entry buy signal. However, 22 is not a strong buy signal bar. Therefore, we found more sellers up here than buyers. But if you're a bear and we continue to channel higher, you got to cover at some point. So if we continue to go sideways and we continue to go up, we may find more buyers. 24, channeling down. You can look at this as two legs down, leg one, pullback, failed second leg up, and now we may find bulls giving up here. But instead, we found buyers below 24, and we formed a bull reversal bar. But is this reversal bar, is this micro double bottom or triple bottom enough to undo all of the selling pressure that's been done today? Maybe, maybe not. But if you're a bear and we get a strong breakout above this bar, As long as it doesn't hesitate, you probably have to cover. 26, bull breakout, somewhat climactic. It is closing above a swing point and a channel line, but it's the first trend line break all day so far. In fact, we may even have a bigger channel line that we need to break before we go much higher. So 25, not much overlap, trying to trap the bears. But if you're a bear, where's your stop? If you sold anywhere down here, maybe you took the stop entry on 24, would you really put your stop here? Or are you thinking it's probably safer to put it up here? Because odds are we could get a bar like this, or we could get a bar like this. Lots of bad follow through for the bears, but probably not enough buying pressure yet to trap the bears. 27 breaking out above 26, finding sellers, testing the start of the channel here, breakout, pullback channel, trend line break, trading range. Now we're testing low close, 24. We may find buyers down here, but look at 27. If you're a bull, are you eager to buy below these lows? Not really. At least I'm not. 28 pulled back briefly, tested the low of 26 and sold off. So a small gap here, trapping the bulls. So 27, small tail on the bottom of the bar. May pull back and go sideways, but I do expect more down. Sideways, doji bar, and then 30, bull bar, but doji, testing the higher time frame EMA now from the underside. So we managed to break out below. Now we're testing that breakout point and trying to rally, but instead we're finding sellers. 31, sold off sharply, breaking out below the channel line. You drew it from the low of 14 across these lows, something like that. So we're breaking out below that channel line, which means we're accelerating to the downside. We do have a somewhat parabolic shape already, and it's getting more parabolic, which means that if we continue to have consecutive sell climaxes with bad follow through and parabolic curves, we may start to find buyers and rally. But 31 is a strong bar, and even though it reversed up into the close of the bar, probably not enough reason to start looking to buy yet. And then 32 is a big doji bar. This reminds me of some sort of news bar with a big tail on the top and the bottom and a reasonably sized body. It's a bear trend on a smaller time frame, leg 1, pullback, leg 2, pullback, maybe a third leg down. Maybe we'll find buyers down here. But channel down, far too tight to look to buy yet. 33, traders bought the close, and we found sellers above the high of 32. But are traders actually buying, or are bears taking profits on shorts? If you're a bear and you're holding short down here, you may want to cover above this bar, but you're probably not sweating it. Overall, this still isn't quite a 50% pullback of the entire sell-off, so we may find more sellers above this bar. Inside bar, small bull doji bar, not what you want to see if you're a bull. If you're a bear, you're probably not too worried about this bar. You may consider getting out here. If you're a bear, is this enough disappointment to make you buy back all of your shorts? It is about the middle of the day when you can expect a small, it's the middle of the day. Usually the middle of the day is when a trading range starts to form for the rest of the day. So whatever does happen here, I imagine a breakout up or down will probably lead back into this area or possibly into this trading range. We found sellers above 34 and we formed a strong bear reversal bar. Reasonable stop entry. It's a failed breakout test of the 30 low after a failed breakout test of the 25 low. So we have 1, pause, 2, pause. Maybe we'll get a third leg down here. Instead, a second leg up for the bulls. But the problem is we're testing the top of the channel, here the high of 30. And again, we're testing the EMA. So we may start to find more sellers up here. 37, we found sellers up here. But then we found buyers below 36, probably hoping for a second leg up from the rally of 32 to 36. Doji inside bar, bear bar. Not good for the bears. not good for the bulls and not ideal for the bears, but not bad. Reasonable to hold. Another inside bar, 39. And then 40 broke out below, reversed up. It's an outside bar in an overall tight trading range. Probably better to do nothing at this point, wait for more information. Breaking out to the upside, but failed to close up there. Big tail on the bar, 41. Testing the EMAs and pulling back. It could be leg 1, pull back leg 2, or leg 1, 2, 3. 42 broke out below 41, found buyers and reversed up, but tail on the top of the bar. And what's the problem with this entire rally? Well, to me, it looks like 3 pushes up. There's a lot of overlap, a lot of bad follow through. And if I'm a bull, I'm pretty disappointed with all this overlap and this bad follow through. So I'm probably going to look to take profits up here. And for that reason, we may find sellers up there. We're also testing the top of the channel. If this is a spike pullback channel, this would be the start of the channel here. So another reason that we may find sellers up here. 43 is an inside bar. We reversed up after we pulled back and tested the high of the bad buy signal bar, 39. I missed that earlier. Looks like we tested it on 42 as well. So maybe we're testing the high of this outside bar, 40. Finding buyers breaking out, 44. Shaved bar, trying to break out of this trading range. And 45, looks like the bears are giving up, and we're probably going a little bit higher. 45 is a strong bar. It doesn't appear to be climactic. I'm not sure how it formed. It's 2 or 3 legs up. And actually, we could be breaking out of a channel line here. So for that reason, we may find sellers. Instead, we pulled back and rallied. So to me, it looks like the bears are trapped. Especially because now we have a gap between the low of this bar and the high of these bars. So if you're a bear and you sold the high of these bars with a stop somewhere up here, and then you sold again, maybe you took profits here, but we didn't get back to your original entry price, so any bear that's still holding is trapped. And for that reason, it's reasonable to be long. 47, traders sold the close of this bar, maybe taking profits on their longs. It's 2 or 3 legs up and a reasonable enough sell signal bar for a short. Lots of overlap in the rally, so if I'm a bull, I do not have very much conviction. And if I'm a bear, I'm looking at this thinking, this is actually a reasonable sell setup. 48 pulled back briefly and sold off, tested the EMA and reversed up, closing above the EMA and holding above the body of 43, this inside bar. So what does that tell you? That tells you that there is a gap between the body of this bar and the body of that bar. So this may be more bullish than I thought. 49, micro double bottom with 48 and reversed up. Pretty bullish. Reasonable to buy the close here with a stop down there, expecting a second leg up from this entire rally. But problem is, 50 isn't what you want to see. We broke out to the upside and reversed down. We are closing above this swing point here, but we need to get more follow through. And if I'm a bull, I would probably get out below that bar. And for that reason, I may even sell below that bar if I was flat. 51, any bear that took that short is now trapped holding a losing position. So you probably have to get out above these bars. But then again, if I'm a bull, I'm pretty disappointed with this so far. I may look to take profits on my longs above these bars. And that is confusing, which means we're in a trading range. And we're below the high of the range, which could be here or it could be here. So probably better to just be flat. Probably better to be long or flat, I would say. 52, channeling down, much less bullish. Weak bar, weak close, failing to close beyond the prior bar. It could be 2 legs down in an overall bull trend, which explains why 53 turned up. 53 is a breakout bar, but it's nearly entirely overlapping the prior tight trading range. 54, we found sellers above 53. We're channeling higher. It's a tight channel, but it's not a very strong channel. In fact, it's fairly broad for a tight channel, meaning that traders are selling highs and making money. And if you're a bull, are you willing to hold long in a market where bears are selling highs and making money? Probably not for too long. We're probably trying to test this high close, which is where we're turning down from, or we're trying to test the high of 27. This strong bear bar probably trapped a lot of bulls thinking that this rally would lead to a stronger leg up and test this high. Even if we do get up here, we have this as resistance to test next, this high close here. So 54, reasonable signal bar for the short, but tight channel holding above the EMA, not a high probability short. 55, reversed up after the stop entry triggered, trapping the bears, but a weak close, a lower high than 54, so the bulls need to get follow through, otherwise we could see some give up bars. Sideways doji on 56, and then 57, another outside bar, still failing to close above this trading range and failing to close above this high close. Excuse me, we did close above that high close on 57, but lots of overlap in an overall tight trading range. 58, trader sold to close at 57, formed a bear bar, but it's a tight trading range, nearly entirely overlapping the prior bar. 59 broke out below and reversed up, forming a strong buy signal bar, but there's nothing to reverse because we're in a tight trading range, so traders may sell above this bar. Tight trading range is something I struggle with. I do not read price action very well when we're in a tight trading range, so I'm pausing the video here and there, and hopefully it's not very noticeable when I do it, but I'm taking notes about that. So 60 sold off, broke out below 59 and reversed up, but it closed below the EMA, and we may find a second leg down. 61, bear inside bar. This could be the second leg. If you're a bear, it's pretty disappointing. And then 62 broke out to the downside and reversed up. Probably enough for the bears to get a quick scalp for a couple of points. Conspicuous tail on the top and failing to close above the EMA, and testing the bottom of the last rally here, 49, and holding above the higher time frame EMA. So it's 1 pullback, 2 sideways, 3 on 62. So that means that it's 3 pushes down. It's a double bottom with 49. And we could find buyers up here, but overall trading range, and I expect more sideways. 63, climactic bar. This bar raced up and then sold off into the close with a fairly conspicuous tail, probably relieving any bull that took the stop entry above 59. Deep pullback in a rally, failing to close above the prior bar, 64, but channeling higher, 3-bar micro channel, no gap. And if you're a bear, you're probably looking to sell these highs. 65, bear bar, good signal bar for a short, reasonably good context, double top, but overall tight trading range, so not much profit potential here for the short stop entry. Better to look to sell pullbacks or sell above the bar. 66, stop entry for the bears is triggered. Shaved bar on 66, but what's the problem? The problem is it could be a sell vacuum test of support. On a line chart, this is double bottom here. Actually a higher low, double bottom. So not the best context to hold short. If I was a bear, I would probably scalp out below this bar, which is exactly what happened. Looks like bears managed to get 1R of the signal bar here, which is why this bar reversed up. So 67, reasonable stop entry for the bulls, but what's the problem? Well, it's really right in the middle of the range, actually closer to the top of the range. So better to buy a pullback rather than take the stop entry on 67. Doji bar closing at the high of the prior bar. 69. Trader sold to close. Second leg down from 65 and 66. But again, right back to the bottom of the range. So tough to be short and may find buyers below that bar. Deep pullback on 70 and then a sell-off. But again, bottom of the range. Second leg down from 65 and 66. Another pullback and a sell-off, 71. Could be an implied 3 legs down. And after 2 legs down, 2 or 3 legs down. Testing the higher time frame EMA, and we may find buyers here. But overall, tight channel down, may need a second leg down, even if we do rally. 72 tried to rally and formed a bull reversal bar, but is nearly entirely overlapping with the prior bar, and it has a conspicuous tail on the top of the bar, which is why we formed an inside bar on the next bar. Trader sold to close, but we found buyers at the 72 low. So now we have a micro double bottom after 2 or 3 legs down at support, which is this higher time frame EMA. And it's a breakout test of the high of 36, the close of 36, or you could look at it as the high of 42. Breakout test here. So we still have an open gap for the bulls. However, it is not a very strong gap. So 73 inside bar, probably going more down, may go more sideways first. Inside bar going sideways first, and then climactic sell-off on 75, finding buyers down here. Could be testing swing point pivot on a line chart, 39, or where bears got trapped, selling below 36 or 39. Strong enough bar for a second leg, but big up, big down, big confusion. This could be near the top of the range, and the bottom of the range could be here. Bull breakout, 75. It is technically a buy signal bar, but really not ideal for the bulls. Are you going to get 1 R of this signal bar if you hold long? Maybe. Not quite there. 77, turning down just below 1 R. Testing possibly the top of the channel. 69, 70, 68. Doji bar, near inside bar, broke out to the upside, trapped the bulls. Probably enough disappointment that the bulls are going to look to take profits at new highs. 78, inside bar. 79, small bull doji. And then 80, bear bar breaking out. 81, inside bar. And that's the day. Overall, pretty decent day. Bear trend from the open, then trading range. Or you could argue bear trend, trading range, 2 legs down, then a tight channel up, overall tight trading range, failed bear breakout, and then another tight trading range. Not bad, but a little tough to read. Lots of bad follow through, lots of tails overlap, big bars racing to the top, racing to the bottom. It's hard to know exactly where support or resistance is exactly. Like here, tough to know whether we'll turn down at the high close or at the high or maybe somewhere lower. And then 75, tough to know that support's going to be down here. I mean, if you look at a line chart, 75 went all the way down here. Really all that I see down here is a higher low from 36, 39 here on the line chart. But then again, you do have trapped bears that sold below 36, 39, getting relieved. Or at least they were close to getting relieved. Maybe we got close enough that the bears started buying, and that caused the market to reverse up. If you're flat, it's the end of the day, first of all, but second, this is big risk. You really want to buy the close up here. You really want to take this stop entry betting on 1 times your risk before, you go sideways. Ultimately, it did work, but you'd have to hold overnight, and day traders aren't really holding overnight. So anyway, that's my read. That's my practice. Thanks for watching.